Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a deep dive into the record high gold price and ASX stocks to watch to capture the momentum. Well, gold has seen a powerful rally in recent months, reaching record high prices and reinforcing its status as a key safe haven asset. The surge in the precious metal has been driven by a combination of macroeconomic pressures, increased demand from central banks, and shifting monetary policy expectations. And expectations the US Federal Reserve will start cutting interest rates has given gold a boost. While as real yields drop, gold looks more appealing compared to investments that pay interest. On top of that, a softer US dollar is making gold cheaper for international buyers, adding to the demand. And all of these factors have pushed gold to record highs, reflecting ongoing investor jitters and a growing desire for stability in the unpredictable global environment. Well, the record momentum in the gold price has analysts tipping further M&A activity in the ASX gold sector. Mid-tier producers and single asset miners are the most likely targets as larger producers look to enhance their production capabilities. Northern Star is on track to complete its $5 billion acquisition of De Grey Mining, with minority shareholder Gold Road Resources agreeing to vote in favour of the deal. This marks one of the most consequential deals in Australia's gold sector since 2023. Meanwhile, Ramelius Resources has put forward a $2.4 billion takeover offer for Spartan Resources, with the goal of forming the largest mid-tier pure-play gold producer on the ASX. Analysts at UBS recently upgraded their target price for US-listed shares of Newmont to $60 from $50 a share, adding a buy recommendation on the stock up from their previous neutral call. Analysts are equally bullish on the Aussie-listed CDIs, with the average recommendation a buy and a target price of $91.42 according to Refinitiv, suggesting a further 6% upside for the stock. Goldman Sachs has a buy recommendation on Gold Road Resources, recently increasing its price target to $3.40 from $2.80, suggesting the stock can rally another 11% from current levels. It says the stock is particularly well positioned thanks to its unhedged exposure and leverage to improved pricing. And analysts are equally bullish on Ramelius Resources, with Macquarie increasing its target price on the stock by 4% to $2.60 and standing by its outperform rating. ASX Trade Watch data show Ramelius is showing clear signs of a strong bullish trend, supported by several technical indicators. Meanwhile, Brian W.B. Chu from the Australian Gold Fund sees risks in the smaller end of town, but also potentially big benefits.
I look for companies that have a strong cash balance. Therefore, they don't need to raise capital anytime soon. They've got advanced projects whereby it's confirmed deposit, quite a good proportion of indicated resources, and hopefully reserves as well. So they're close to development. Hopefully the company secured financing so that they are able to just send in the construction vehicles, build the mine, and then away we go.
Well, amid the continued rally in the price of gold, Goldman Sachs analysts have raised their year-end price target to $3,700 per ounce. Meanwhile, UBS analysts now expect gold to hit $3,500, which is 23% above their previous forecast. The analysts cite parallels amidst the current uncertainty to past crises like the global financial crisis and COVID-19 pandemic. And technical analyst Michael Gable from Fairmont Equities told Ausbiz the charts are indicating gold has further to run.
Gold's moved from 2,000 an ounce to a bit over 3,000. Feels like a big move, but compared to previous sort of major worldwide events, which I think we have to admit that we're sort of going through right now with what Trump's trying to do with tariffs and the way he's treating relationships and all these sorts of things, we could be in another one of those sort of major moves for gold.
And that is your IG Macro Intelligence for this week. We'll see you next week.